Let me start with a question someone asked me recently. And honestly, it stopped me cold. If AI is going to take over everything in the next 10 to 15 years, if work becomes optional, if universal basic income kicks in, then what's the point of money? What's the point of doing anything? Here's the thing, that's actually a fair question, but the way most people frame it is completely backwards. They're asking about 50 years from now. They're asking about some distant future where everything's been figured out. But I want to ask you something much simpler. What about the next 10 days? If you don't have money to survive the next 10 days, what does 50 years from now even mean to you? Money is like air and water. You don't get to opt out of needing it just because you read a tweet about AI taking over. And yet, here's what blows my mind. Almost nobody ever asks the most fundamental question of all. What even is money? Not how to make it, not which stocks to pick, not what crypto to buy. I'm talking about something way deeper. What is money? Where did it come from? What is it turned into? And is what you're holding on to right now actually worth anything? I've spent the last 6 months going deep on this, and I mean deep. I barely put out any content during that time, just one video called Silver is the New Gold, and most people completely missed the point. They were just happy I posted something. Nobody caught what I was actually saying. That tells me everything I need to know about where people's heads are at right now. So let me try again. Let me lay this out as clearly as I can. The history nobody taught you. Most people think money started with barter. You give me wheat, I give you salt. And that's true as far as it goes. But here's what got skipped in your economics class. Every early form of currency had problems. Wheat rots, salt gets wet, spices are hard to divide. So over thousands of years, across dozens of civilizations, eventually humanity landed on the same answer, independently, over and over again. Gold and silver. Not because someone decided it, because it worked. It had properties nothing else could match. And we'll come back to why, because that part is critical, and most people get it completely wrong. Now here's where it gets interesting. Ever wonder where the word pound comes from, as in British pound sterling? Sterling silver, that's your answer. The oldest currencies in the Western world were literally made of silver. But here's the thing about empires. They always need more money than they have. Wars are expensive. Expansion is expensive. So what did these empires do? They started mixing copper into their silver coins. Just a little at first, barely noticeable. Then a little more, then more, then more. And the moment people figured it out, they did what anyone would do. They hoarded the real silver coins and rejected the fake ones. The debased currency collapsed. The real money held its value. This happened with every single empire throughout history. Every single one. The story is always the same. Real money, gold and silver, gets replaced by something that looks like money but isn't. And eventually, that system collapses. It might take 10 years, it might take 100 years, but it always falls. Paper currency and the big lie. Paper currency started in China, and when it first appeared, it wasn't a scam. It was actually brilliant. Here's how it worked. You'd take your gold or silver to a trusted institution, a custodian, a bank, whatever you want to call it. They'd give you a receipt, a piece of paper that said, this person has X amount of gold stored here. You could then trade that paper with other people, and at any point, whoever held that receipt could walk in and exchange it for the real thing. It was 100% backed by gold and silver. The paper was just a convenient representation of real money. And then, slowly, quietly, over generations, that link started to break. First, governments stopped letting ordinary citizens redeem their paper for gold. Then they stopped letting other countries do it. Then, in 1971, President Nixon went on national television and made it official. He said, essentially, the U.S. dollar will no longer be exchangeable for gold. Full stop. Most people think of that as a technical policy change. Let me explain what it actually was.
Imagine you have money in a bank. You go to withdraw it, and the bank manager looks at you and says, "We can't give you your money, but here, have a checkbook. Write as many checks as you want. That's what happened in 1971. The gold was the real money. The paper was the checkbook. And after that day, the checkbook became all we had. This is what's called fiat currency. And every currency in the world today, dollars, rupees, euros, all of it is fiat, paper backed by nothing but the promise of a government. What is inflation, really? Here's where most people's understanding completely falls apart. Most people think inflation means prices going up. Rice costs more, gas costs more, your grocery bill is higher. And yeah, that's what you experience, but that's the effect, not the cause. Before 1913, before the Federal Reserve even existed, economists defined inflation very differently. Simply put, inflation is an increase in the supply of money in an economy. Let me say that again. Inflation is not rising prices. Inflation is printing money. Rising prices are just what happens because of that. When a government needs to spend more than it earns on wars, on social programs, on keeping people happy enough to vote for them, it has two options. It can borrow or it can print, and most governments do both. Every dollar, every rupee that gets printed dilutes the value of every dollar and rupee already in existence. So the price of rice didn't go up, your currency got weaker. Same rice, less purchasing power. Inflation is a tax. It's the most invisible, most insidious tax ever invented because nobody votes on it. Nobody debates it in Parliament. It just quietly drains the value out of whatever you've saved. And the people who designed this system, they gave it a beautiful name, quantitative easing, so it sounds like a cure instead of the disease. The bubble nobody wants to talk about. Here's what I've been sitting with for 6 months, and I'll be honest with you, it shook me. 50 years ago, where did regular people keep their wealth? Gold and silver. 100 years ago, same answer. Then it shifted to fixed deposits and real estate. And today, whether you call it mutual funds, index funds, SIPs, it's all the stock market. It's all digital, entries on a screen. Foreign institutional investors have been quietly pulling money out of emerging markets for years. Who's been propping up stock markets? Regular people. People who got sold the idea that the market always goes up, always recovers, always rewards patience. And look, sometimes that's true. But here's the question nobody asks. What happens when the biggest bubble in history doesn't recover? The dot-com crash of 2000, the housing crisis of 2008, every time something collapsed, where did scared money run? Into the U.S. dollar, into U.S. treasuries, because those were safe. But the U.S. is carrying over $35 trillion in debt. Last time I checked, it was approaching $38 trillion. The interest payments on that debt now exceed the entire defense budget. Think about that. The most powerful military in the world, and they're spending more just to service their debt and to actually run it. They have exactly two options: default, which would mean total collapse and they know it, or inflate it away, print enough dollars to make 40 trillion feel smaller, which means making every dollar already in existence worth less, which means hyperinflation. Most people don't realize this, but central banks do, which is why the world's central banks, especially in BRICS nations, have been buying gold at a rate of over 1,000 metric tons a year. They know something the public doesn't. This isn't insider trading in some stock. This is insider trading on civilization itself. Let me explain why I think multiple bubbles are about to pop at the same time and why that's never happened before at this scale. Everyone talks about AI like it's magic, but nobody talks about what it actually needs to scale. Energy, infrastructure, raw materials, manufacturing capacity, government support. On every single one of those metrics, China has a structural advantage. Lower energy costs, government subsidies directly flowing into AI and robotics companies, a talent pipeline that rivals anyone in the world, and access to the rare earth minerals that make all of this possible. Meanwhile, AI companies in the U.S. still don't have clear revenue models. They're valued on potential, not performance. That's the definition of a bubble. The dot-com era had one bubble. 2008 had one bubble. What's coming, if my read is right, is multiple bubbles collapsing simultaneously. Stock market, housing, the dollar itself, all connected, all feeding into each other. When regular people feel poorer, they spend less. When they spend less, companies earn less. When companies earn less, their stock prices fall. When stock prices fall, people feel even poorer. It's a spiral. And at a certain point, central banks can't stop it by tweaking interest rates. The machine breaks. So, what do? I want to be straight with you. I can share maybe a fraction of what I've come to understand over these 6 months. The full picture takes time to build. But here's what I'll tell you. The death of fiat currency is not a possibility, it's a certainty. Every fiat currency in history has eventually failed, every single one. The only question is timing, and that's where your research comes in. If you know history, you can read the present. And if you can read the present clearly, you can make educated predictions about what's coming. Not perfectly, but well enough to position yourself before the crowd figures it out. Most people will only understand this after the fact. By then, it'll be too late. The people at the top already know. They're already moving. They're offloading IPOs to retail investors. They're cashing out while ordinary people buy in. Legally, maybe. Ethically, that's a different conversation. Here's the question you should be asking. Not how do I multiply my savings, but how do I protect what I have? Because if the scenario I'm describing plays out, it's not about growing your money. It's about whether your money retains any real value at all. Go study the history of money. Not from textbooks that governments approved, from primary sources, from the economists and thinkers who wrote before 1913, before the Federal Reserve, before fiat became the norm. The answers are there. The trail is clear. Why gold and silver? Don't take my word for it. Don't take anyone's word for it. Find out for yourself. Because once you understand why, genuinely understand it at a deep level, then questions like, is Bitcoin as good as gold? Or what about tokenized gold? Start to answer themselves. Every major problem in history came with an equally major opportunity. People who understood what was happening made generational wealth during the Great Depression, during the Weimar Republic collapse, during every hyperinflation event in the 20th century. They survived, and more than survived, because they understood what real money was. Here's my suggestion, and I mean this sincerely. Stop looking for someone to hand you the answer. No one is coming to save you. Not the government, not financial advisors, not YouTube channels. The only person who can protect your future is you, but only if you're willing to ask the right questions and keep pulling the thread until you get to the truth. The death of fiat currency is as certain as death itself. The only variable left is when. And if you can figure that out, even approximately, you will be one of the very few who's actually ready. That's it for today. Do your own research, go deep, and don't stop asking questions.